Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings so you don't have to read them. Today we're diving into a document that's amended, recasted, and frankly could use a decoder ring of its own. We're looking at Starwood Real Estate Income Trust's 8KL filing, which is basically a correction and update to their previous financial statements for 2024. Get ready, because we are putting on our glasses and going deep into these numbers. Before we start, if you are finding it hard to keep up with all these complicated fillings and wish it was easy, make sure you're subscribed. We also have a Discord community linked in the description below to discuss this together with other finance enthusiasts. So what's the story here? Back in June of 2025, Starwood filed an 8K report because they changed how they report their business segments. Think of it like they reorganized their departments and needed to show what the numbers would have looked like if those departments were organized the same way last year. Now, this is an amendment, meaning they are making some corrections. What we're looking at now is an amended version of that report with the full financial statements from their 2024 annual report, plus some updated details. The big reason behind all the paperwork shuffle, Starwood changed how they group their businesses, which they call segments. Starting in the first quarter of 25, they combined single-family rental properties and self-storage properties into one bigger group called other properties. This means they had to go back and recalculate all the numbers from previous years to match the new structure, so that it is apple to apples for comparison. Imagine if you rearranged your closet and then had to remember that your blue shirts are actually with the green ones. The filing includes quite a bit, but mostly is related to recasted information, meaning things have been reorganized and represented. Let's look at the financials quickly to see if we can notice anything interesting. In situations like these, recasted information is often not very interesting to a retail investor. Alright, digging into the numbers, we can skip most of this section. If we examine the different assets, they look very standard for a company of their size. If you read that it increased by 5% over last year, it does not mean much. If it instead doubled or halved, that could have been meaningful. Looking at a different note related to recent events, there is a mention of the distribution reinvestment plans, or DRIPs, allow shareholders to use their dividends to purchase additional shares of the company, often without commissions or fees. It is like earning money and then instantly putting it back into the company to buy more stake. This is usually a good sign of a company being shareholder friendly. The rest of the filling is quite boring overall, relating to exhibits and compliance standards. Let's get to my opinion. Keep in mind that without very obvious indicators, opinions on the real estate income trust based on compliance reports or recasting information are often not very meaningful. However, there are some high-level takeaways, and it's not all bad news. Up to the company is taking compliance standards and regulatory changes quite seriously. They are very proactive and thorough to present to the SEC and investor everything clearly to. The deviations are ongoing, and the mention of the reinvestment plan means investors are happy with that. As they can use this free money to get a bigger stake into the company, Accession numbers are trending positively year over year, but some of these numbers are trending positively year over year, but some of these numbers are trending positively year over year, but some of these numbers are trending positively year over year. But some of these numbers are not really actionable for retail investors unless compared to the same period of other players in the market. Dollar draw, the filling could have been very useful if we wanted to create a comparison sheet to other REITs, but we lack enough external information. As for risks, REITs are subject to a lot of market variables such as interest rates and occupancy. Since this filling related to recasted segment information did not present us with any interesting angles to analyze, it is hard to get many actionable metrics. Now, what's your take of this information? Let me know your comments below. I hope this analysis was valuable to you and worth your time. If it was the case, consider hitting that like button and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, and I'll see you next time.